Let me introduce two key Malaysian companies, Apollo Food Holdings Berhad and Malayan Flour Mills Berhad or MFM. Apollo is known for producing layer cakes, chocolate wafers, and snacks for both local and international markets. Meanwhile, MFM specializes in high-quality flour, which is essential for food production across various industries. Both companies play vital roles in supporting Malaysia's hospitality, tourism, and wellness sectors. Apollo Snack, including healthier options, help hotels, cafes, and restaurants attract and retain customers. On the other hand, MFM's flour is crucial for producing high-quality bread and pastries, ensuring consistent standards in hospitality service. Together, they contribute to Malaysia's reputation as a top culinary destination. Understanding their financial health is crucial. Profitability and liquidity ratios allow us to evaluate how well they manage costs, ensure financial stability, and meet customers' demand. Forecasting enables both companies to adapt to market trends. For instance, Apollo can innovate health-conscious products while MFM can adjust its productions to meet changing demands in the hospitality sector. In conclusions, Apollo and MFM are not only essential to Malaysia's food supply chain but also drive economic growth by supporting hospitality and wellness industries. Analyzing their financial health gives us valuable insight into their stability, growth, and impact on these industries.
Here is some background on Apollo Food Holding Berhad. The company was founded in 1962 and is based in Shah Alam, Selangor. The product is biscuit, cake, and snacks. Apollo aims to be a leader in food manufacturing in Asia by focusing on quality and accessibility. The company is also known for its innovative product and strong performance in exposed market.
There is some of background that I want to tell about Malayan Flour Mills Berhad. This company was established in 1966. The headquarters of the company, which is located in Kuala Lumpur, Malaysia. This company also produces some of products like wheat flour, noodles, and rice products. The vision of the company is what to be a leader in flour and food products in Southeast Asia with sustainability emphasis. The company also got the achievement, which is the pioneer in wheat flour milling in Malaysia, with modern manufacturing facilities. This is from me about the company of Malayan Flour Mills Berhad.
Hi, Assalamualaikum warahmatullahi wabarakatuh. I'm Muhammad ALIF bin ZULKIFLY. My metric number is H23A15778. Okay, I want to discuss about trend analysis Apollo Food Holding Berhad. Okay, let me explain it. So this is a trend analysis Apollo Food Holding Berhad. We use the formula is the liquidity ratios, and the formula is the current ratio, current assets divide for the current liabilities. And so the total is 18.07 for 2022, and then 20.32 for 2023. Sorry. Okay, so the interpretation is in 2022, Apollo Food Holdings Berhad had a 80 ringgit 7 cents in current asset for every 1 ringgit of current liabilities. This indicates this indicates a very strong liquidity positions with a significant cushion to cover short-term obligations. Meanwhile, in 2023, the current ratio dropped to 20.32. So the times, meaning the company had 20 ringgit 32 cents in current assets for every 1 ringgit of current liabilities. While this is still above the typical benchmark to 2.0 for most industries, it reflects a weakening of liquidity compared to the previous year. Okay, so look at the quick ratio, the part B. So the formula is we use current assets minus inventory, divide current liabilities. So for the 2022, we got 15.43, and for 2023, we got 16.97. So for the interpretation, is the in 2022, Apollo Food Holdings Berhad had 50 ringgit 43 cent in liquid assets, excluding inventory for every 1 ringgit of current liabilities. Meanwhile, in 2023, the quick ratio declined to 16.97 times. This means the company had 60 ringgit 97 cents in liquid.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad AMIRUL ASYRAF bin ZULKAFLI. My metric number is H23A2331. Today I want to explain about trend analysis of Malayan flour mills Berhad. So the current ratio for Malayan flour mills Berhad in 2022 is 1.33, and for year 2023 is 1.34. The current ratio improved from 1.33 in 2022 to 1.34 in 2023. This suggests an increase in the company's ability to meet its short-term obligation. So next, the quick ratio in 2022 is 0.77, and in 2023 is 0.84. The significant increase in the quick ratio from 0.77 in 2022 to 0.84 in 2023 indicates a substantial improvement in the company's ability to meet its short-term obligations with its most liquid assets. So lastly, net working capital in 2022 is 370,373 ringgit, and in 2023 is 361,530 ringgit. Net working capital decreased significantly from 370,373 ringgit in 2022 to 361,530 ringgit in 2023, indicating improved financial health and a stronger ability to cover short-term obligations. Thank you.
Assalamualaikum. My name is Muhammad IZWAN bin Muhammad ARZUN'ADI. My metric number is H23A1817. Let me continue the presentation. So number 4 is efficiency ratio. Inventory turnover Malayan flour mill is 4.26 and Apollo Food Holding 50.05. A higher inventory turnover ratio indicates efficient inventory management. Apollo Food Holding demonstrate exceptional efficiency, which is 50.05, cycling through its inventory much faster than Malayan Flour Mills, which is 4.26. Next, asset turnover. Malayan Flour Mills 1.07 and Apollo Food Holding 0.77. Asset turnover measure how efficiently a company use its asset to generate sales. Malayan Flour Mills with a ratio of 1.07 utilize its asset more effectively than Apollo Food Holding, which is 0.77. Number 5 is leverage ratio. Debt to equity ratio. Malayan Flour Mills 1.00 and Apollo Food Holding 0.08. Malayan Flour Mills debt to equity ratio of 1.00 indicates an equal proportion of debt and equity financing, reflecting moderate financial leverage. Apollo Food Holdings very low ratio, which is 0.08, suggests it relies minimally on debt, indicating conservative financial management. Number 6 is market ratio. 1. Earning per share. Malayan Flour Mills 0.229 and Apollo Food Holding is 12.46. EPS measure profitability per share. Apollo Food Holdings much higher EPS, which is 12.46, show it is significantly more profitable on a per share basis compared to Malayan Flour Mills, which is 0.29. Second, price to earning ratio. Malayan Flour Mills 4.62 and Apollo Food Holding is 52.16. The PE ratio reflect market expectation of future earning. A higher PE ratio for Apollo Food Holding, which is 52.16, indicates that investor expect higher future growth or are willing to pay a premium for its earnings compared to Malayan Flour Mills lower ratio of 4.62.
My name is RADHIAH binti Abdul Hadi. My matrix number is H23A1776. Hello everyone. Today I will be presenting a comparative analysis of the financial performance and health of Malayan Flour Mills Berhad and Apollo Food Holdings Berhad for 2023. Starting with profitability, we see that Malayan Flour Mills slightly is out Apollo Food Holdings in net profit margin, indicating better cost control of profits generation. However, Apollo Food Holding Berhad in net profit margin, indicating better cost control or profit generation. However, Apollo Food Holdings Berhad in net Food Holding Berhad's boasts a higher returns on asset, signifying greater efficiency in utilizing its asset to generate profits. Interestingly, Malayan Flour Mills Berhad returns on equity is significantly higher, suggesting a more effective use of shareholders' capital. Okay, moving on to liquidity. Apollo Food Holdings Berhad demonstrates superior short-term financial health with a higher current ratio, indicating a stronger ability to cover short-term obligation. Additionally, Apollo Food Holdings Berhad quick ratio excludes inventory is also higher, implying better liquidity even without relying on inventory sales. Examining leverage, we observe that Malayan Flour Mills has a higher debt to equity ratio, indicating a greater reliance on debt financing. This could pose a higher financial risk compared to Apollo Food Holdings Berhad. Apollo Food Holdings Berhad more conservative approach. Finally, in terms of efficiency, Apollo Food Holdings Berhad exhibits a higher asset turnover ratio, suggesting it generates more revenue per unit of asset. It indicates better operational efficiency compared to Malayan Flour Mix Berhad. In conclusion, both Malayan Flour Mix Berhad and Apollo Foods Holdings Berhad have big strengths and weaknesses across different financial metrics. MFM excel in profitability and utilizing shareholders' capital, while AFHB demonstrates superior liquidity efficiency and a more conservative financial structure. Investors and stakeholders should consider these factors when evaluating these companies for investment or partnership opportunities. My name is
Apollo Food Holding Berhad has shown excellent profitability with a net profit margin of 12.31% in 2023, outperforming competitors along with strong ROA 6.56% and ROE 13.27%. However, its liquidity ratio are slightly below ideal safety levels, and its debt to equity ratio of 2.02 indicates increased financial risk. Despite this, Apollo excels in inventory management with an extraordinary turnover ratio. Thus, there is room to optimize asset usage. In contrast, Malayan Flour Mills Berhad (MFM) struggle with low profitability, 0.17% profit margin, weak ROA 0.20% and ROE 0.39%. MFM has better liquidity but slower inventory turnover and higher reliance on debt. Debt to equity ratio of 1.92. MFN low EPS and high PE ratio of 234.14 suggests potential overvaluation and inefficiency in generating profits.
In calculation, both company Apollo Food Holding Berhad and Malayan Flour Mill Berhad had hybrid strong financial health in their financial statement, and in fact each excel in different areas according to calculation. Syarikat Malayan Flour Mill Berhad has a lower net profit margin compared to the higher net profit margin of Apollo Food Holding Berhad. After that, return on equity, Apollo Food Holding Berhad has a higher return on equity than Malayan Flour Mill Berhad. Therefore, this shows that Apollo Food Holding is more efficient in generating profit from shareholder equity. Even the liquidity ratio is that both companies has an acceptable liquidity ratio, with Malayan Flour Mill Berhad have a quick ratio and Apollo Food Holding Berhad also has a quick ratio. Therefore, besides on the financial ratio provider, Apollo Food Holding Berhad provider profit and efficient is generating return to shareholder compared to Malayan Flour Mill Berhad. However, both companies show an acceptable liquidity and leverage ratio, indicating an overall stable financial position in the calculation made. Lastly, this shows that both companies have sufficient liquid assets to cover their short-term liability because both have a good financial position. Efficient ratio, Malayan Flour Mill Berhad inventory turnover ratio is higher than that of Apollo Food Holding Berhad. This shows that Malayan Flour Mill Berhad is more efficient in managing its inventory than Apollo.